Hello traders. Okay, I've just realized that most of you are having a big problem trading uh, diagonal diagonals, that is wedges, or in terms of Elliott Wave analysis. So the big problem is not how to draw the wedge or where the wedge appears. That is really not the big problem for most of you. The biggest problem I've realized is what type of wedge are you intending to trade? What type of wedge are you intending to trade? So uh, that is what I want to talk to you about today. That is what I want to teach you today. At the same time, again, I want to combine that aspect with another aspect that I had previously talked about, that is the complex corrections. And when I talk of complex corrections, I talk of WXY, WXY, or rather, I talk of WXYXZ. It is not WXYZ, but then WX, YX, and then finally Z. That is also another complex correction that you could be talking about when you are talking about complex correction. So these two corrections are very important. These two types of corrections are very important, and most of Elliott Wave practitioners, or even beginners, and most of even advanced traders, they don't like trading complex corrections, because just from the name itself, it is more complex when you really don't understand it. So the first point that I wanted to talk about, that is how to trade the wedge. You know that we only have two types of wedges in Elliott Wave analysis. We can only have two types of wedge, and the first one is the 3-3-3-3 wedge, and then we have 2-3 uh, 2-3, and then 2-3 wedge. So the most common one is the 3-3-3. That is, we have the first, the second wave, third wave, fourth wave, and then finally the fifth wave, then before we look at the breakout. So this is the wave that we like to call a 3-3-3-3 wedge, and this is always the most common. This is always the most common type of wedge in Elliott Wave analysis. Another type of wedge that probably you can see, or you will likely see, is the other one, that is 3, then we have 5, 3, and then finally we have 5. This is also another common, that is we have 5-3, 5-3, and then 5, and now we break out. So these 5 always this first wave, it is always coming out of the first impulsive wave, that is wave 1 through 5, and then we have the correction part, that is ABC, and then another good impulsive wave within this wedge now, that is 5, 1, 2, 3, 4, 5, and then another small correction, that is wave 4 within this diagonal, that is ABC, and then finally we clear it with the 5 wave pattern, that is wave 1 through 5. So these two types of waves are common, and the most important thing in trading these wedges is what kind of wedge are you intending to trade. That is even the first most important question that you should be asking yourself. That is the most important question you should be asking yourself, and that takes us to our today's analysis. This is a live analysis, so if you are watching it when I post it, immediately I post it, then you are lucky enough to get the insight on the forecast on this currency pair, that is GBP CAD. If you will be watching it later on, then you are still at a bigger disadvantage, at a greatest advantage, I mean, because I'm not just showing you the forecast, but I'm showing you how you can tackle another trade later on your own, when you finally come to receive, or when you see another pattern that resembles this one that we'll be looking at today. So this is the wedge that we are trading, and this type of wedge is common, and this I say this type of wedge is very common because you will see it most of the time. So in this case, this is a 333 type of wedge, and you know very well that is the first step in determining what type of wedge you are trading. That is the most important first step. The second step that you should know is that anytime you are trading a wedge, most of the time when it is appearing on the fifth wave, or in a C wave, in corrective wave analysis, then there is always a likely chance that this wedge, after breaking out of this uh, 0.24, it will likely trade to the beginning of this wedge, and it can even surpass. So it is a great advantage when you are at a great advantage when you are trading this wedge not as a leading diagonal, but as a ending diagonal. When I talk of leading diagonal, I mean trading it during wave 1, or when I talk of ending diagonal, I mean trading it during wave 5. So being that we have this type of uh, analysis, or rather that type of insight at the back of our mind, then that takes us to analyzing the kind of pattern we are having right at this point. And this kind of pattern is very, very important, and if you can really get to know this pattern, then you are at a big advantage. Compared to most of Elliott Wave practitioners. So looking at this wave, what I'm seeing in this wave is a complex correction. Because we can see that this wave, after breaking out of this point, we never saw this wave complete this wedge. So we still have more of like a big space right at this point, more than 100 to 200, 150 to 200 pips that is left for clearance right at the bottom. And before that, we saw market tended to get back, that is got back into a bullish trade. And what we are seeing something more of like a consolidation right at this point. So what we are waiting for is what the market will do right at this point, when market clears out this consolidation. Then what we'll be waiting for is for this market to clear out, because this is more of wave what we are having right here is wave A, B, C, D, and then finally we'll be looking at wave E. Right at that point. So this is what we have. This is what we have in terms of that correction. So what we are actually waiting for is market to clear out this point. Even if it can hit the upper resistance, we still don't have any problem, because it falls within our rule of consolidation, or rather our rule of trading this symmetric triangle. So when you look at this, we are waiting for this market to finally clear out wave E, meaning we are still more of in a little bit of uptrend, because this is a daily time frame analysis. Let it clear out wave E, then we are waiting for this market to break out of this point BD. When it breaks out of this point BD, that will be a clear sign. That will be a clear sign that we are going to be trading our complex wave, that is wave Y. Now this becomes the reason as to why I'm looking at it as in terms of complex correction. We have this wave W, and then we have wave X right at this point, and then finally we are likely to clear out wave Y at that point. So again, if you look at this keenly, you will realize that this wave W, you know very well that when I talked of wave WXY, I said in my previous post that this is the first important wave, that is wave ABC. This is wave ABC. This is the first important wave, that is wave ABC. So right at this point we have wave ABC. What we'll be looking at this point also is wave ABC. So looking at this type of analysis, you have so much insight in trading this currency, that is GBP, or rather pound, British pound, Canadian dollar currency pair. If you enjoy this content, kindly hit the subscribe button. If this content was of value to you, kindly hit the subscribe button. Also like this video, comment down below if you have any question, and if you don't have any question, more of these precise points of entry, and where to get in and where to exit, and risk aspect of all these trade setups is something I post on my VIP group. So if you'd like to be part of that great community, you can also just hit me up and subscribe to our VIP group. And remember, at the same time, VIP in our VIP, there is quarterly subscription. You can have a quarterly subscription that goes for 3 months, and then we have semi-annually, and then we have annually, and then we also have for a lifetime. So all that, if you would like to subscribe to any package, you can just hit me up and we'll see what to do about that. Otherwise, see you in the next episode, and have a successful week ahead, and have a peaceful week. Thank you.